Hello, everyone. Today we are talking to David Siegel, one of the speakers of the upcoming ICO event Amsterdam. Hi, David.
Hi.
David is an author, consultant, investor, and globally renowned blockchain and cryptocurrency expert. We will be discussing the specifics of cryptocurrency investments and try to imagine the people of blockchain era. David, you're an authority in the field of blockchain. You often say in your presentations that it's a fundamentally new approach to data. In your opinion, how will the shift to blockchain change the society?
Right. Well, I think we want to avoid pouring the same old wine into new bottles. I think we want to think, we have a chance now, an amazing opportunity now to think in new terms of person to person, and trustless networks are going to enable all kinds of new innovations. So everyone knows that blockchain is a big deal, and I want not just entrepreneurs and like venture capitalists, but also regulators to think of this as a new asset class that's going to have new rules. I mean, even comparing it to the old financial system is probably going to end up putting it into boxes that don't apply. So we want to think of it as a kind of a new. We want to think of it as a new framework in the same way that the web did. I think the comparisons to the original web are appropriate, because now, not just on Ethereum, but on all the new innovative blockchains and other shared ledgers and other new technologies coming out, we really have a chance to build an entirely new framework for all industries, not just financial.
And how do you think, how will people of blockchain era differ from us? Will there be any differences at all?
Yeah, there will, because it's interesting. It'll be more self-service, right? We're kind of used to Google not having any service at all. You can't really get a Google person on the phone generally, right? So it'll be more like that. I think it'll be less like Apple and more like Google. It'll be more decentralized, more you're in control. So for example, if you lose your private keys, there's no phone number to call. There's no one's going to help you reset your keys. Your money is gone. So we're going to have to give people more better interfaces and more safety levers, and take away the ability to get in big trouble. But still, you're going to be responsible, and you're going to interact with other people on the end. For example, if you buy insurance, you may end up buying insurance directly from a hedge fund or liquidity pool or another person, rather than an intermediary with lots of nice people on the phone in case you have any questions. It's going to be more like the smart contracts are going to tell you what happened. So you're going to have to be more responsible in this world.
And without the need to fill in lots of papers, right?
And without a lot of papers. And more and more, these smart contracts are going to get smarter and smarter, and we'll have agents. You can think of Siri as about the dumbest possible agent. We're going to look back in 10 years and say, man, that was a caveman, interface. Because our agents are going to be able to help us anticipate our needs, do things for us. You're going to say, oh, great, make that reservation, or sure, buy me a couple of those, or yeah, I'd like to extend my loan another month longer, or could you please get my landlord to extend my rent for one more month, or could you please pay this bill? This is the kind of stuff our agents will do for us, and they will use the smart contracts.
I see, David. You have cardinally changed your profession. You were once one of the first web designers and owned an agency, and then became a blockchain specialist. And please tell us why you were attracted by the latest technologies, and what were the sources of your knowledge?
Well, there were about 15 years in between selling my design agency and started to learn about blockchain. And I got started by getting the Consensus newsletter. I recommend some newsletters. The Consensus newsletter is fantastic. I like the ARK Investors. That's just a general technology newsletter. I read that every week. And then I recommend the Pillar Project newsletter, of course, because I'm trying to educate people about this new world. And I learned a lot on YouTube. I still do. I recommend people go to YouTube and you can learn anything from beginner to what's the latest talk that Vitalik Buterin just gave. It's all on YouTube. That's great. I was talking to a class of students in Russia, and I said, learn everything on YouTube. And they said, oh, we have RuTube, Russian YouTube. And I said, great, that's the place to go and learn everything and make your own videos and participate.
David, you often advise to be careful when investing in an ICO. Which actions should be taken by cryptocurrency investors?
Right. I don't actually say, well, actually, you're right. I do say be careful out there. You're right. I always say be careful out there when I end the ICO show. I want people to understand that risk is not so bad. It's exposure that kills you. So exposure is more important than risk. In your mind, you may believe a certain investment of any kind, whether it's Apple stock or the latest ICO, is going to really pay off and make you a lot of money. And you've got stories of people who they sold their house, they put all their money into Bitcoin 5 years ago, and now they have $100 million. That's great. It's not smart, okay, because there's lots of uncertainty. There's no way to know 5 years ago that Bitcoin would be trading at $7,000. There's no way to know. So it looks smart. It's actually stupid. You should take appropriate precaution to diversify and make sure you're not overcommitted to any one thing. That's why I try to help people understand portfolio theory so they build a smart portfolio and don't get overcommitted on one particular thing.
Maybe you could specify some specific steps which could be taken at the stage of choosing a project.
Well, you don't know how the future is going to play out. There's no way to know. You could love it, and there could be lots of experts and lots of agreement, and they raised 150 million or whatever they raised. There's still no way to know. Look at what's happening with Tezos. Bancor is another good example. These things are just raising too much money, and I think have a very low chance to return really anything. Honestly, anything that has raised over $100 million is going to be very challenged by a lot of things. So a smart portfolio is don't cherry pick your favorites. Instead of choosing the winners, what I recommend is build what we call a heuristic, a filter to get rid of the losers, the ones that you believe are scams or have no chance for whatever reason. And then everything else, just admit that you don't know, and it might work out and it might not, and buy a small amount of each. So take the amount of money you want to invest, divide it by at least 20. I think 40 is a better number, and put 1/40th or even 1/50th of that amount of money on a bunch of different ICOs. And this sounds like a stupid idea, but if you do the math and make a simulation of this, actually it comes out pretty well. It's not.
It might really sounds good.
It might not make you $100 million, but you might not have nothing either at the end of it.
I see, David. I know you've written the ICO Handbook. What made you do this? What inspired you?
Well, we had an ICO in July that went very well, and my advice to everyone doing an ICO is that it's 30% really hard work and super smart people, and 70% luck. And I can back that up with data. So I wrote, it's called the Token Handbook. It's at thetokenhandbook.com. And it's really a book. It's kind of evolving. I'm adding more chapters, and it takes a couple days to get through, but it tells my story of what we went through and really all the nitty-gritty details so other people can understand how hard. I've had people email me and say, we were going to do an ICO till we read the Token Handbook, which is one chapter of the ICO of we were going to do an ICO, but after I read the ICO Handbook, which is one chapter of the Token Handbook, we decided not to because it's not easy money. It's really difficult, and there's a lot of risk. You can get hacked and you can get your funds stolen. Other people can get their funds stolen on the way to investing in your ICO.
See, David, the topic of your presentation for ICO Event Amsterdam is token types and business models. Please tell us shortly what you will be talking about and whom do you mainly address your presentation?
Yeah, I want to fix tokens and I want to fix ICOs, and I'll be talking about just that. So we're all using the same token standard, which I think is not really sustainable. Too many ICOs are just using the token to raise money, and that it doesn't have much of a future role in their system, even though they say it does, and they've written a white paper and they promise that it fuels the system, it powers the system. I know. But most of these things, really, the main purpose of the token is raising money. Because it's hard getting money from venture capitalists. I understand. I mean, I've been there many times. But I'm going to fix ICOs with a new kind of token offering, and I'll be talking about that two different kinds of token offerings in my talk.
Token offerings?
Offerings. Two different kinds of ways to raise money using tokens. Mm-hmm. And I hope that we kind of evolve next year. We migrate to these two different ways of raising money with tokens over the course of the next year. Plus, there will be a lot more regulation. So things are going to change quite a bit from the heyday of 2017 to, I hope, the more rational markets of 2018.
Well, thank you for the interview, David. It was a pleasure talking to you.
We'll see you in Amsterdam.
See you there too. Waiting forward to it.
Okay.
Bye now.
Bye.